Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, clicking on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Sunday, December 26th, 4:10 p.m. New York time. We're going to do a top-down analysis looking from the weekly, daily, intraday 4 hours to identify trend and setups and possible triggers. So this is the last Saturday of the month of December, as well as the last Saturday for the year. And next week, coming into the last week of the year. Start off looking at the US dollar index. On a weekly chart, we completed an inside candle. Means the high and low do not take out the prior high and low. Look at that, it's an consolidation phase. To me, see these yellow candles? They are equivalent to the red candles because they're solid bodies. So that's showing me a lot of distribution. I'll explain this another way. These two red candles, these two yellow candles, they close, most of them close near their below 50% of the trading range, closer to the bottoms. That's bearish. Again, the dollar is still holding up here strong, but I'm being very concerned of how much higher it's going to go. More likely, it's going to have a retracement, possibly the trend change too, on a continuation. We'll see what happens, but use caution here. It's I'm interpreting it, as potential to have a sell-off. On the daily, look at that. It's in this wedge. The top you see is rejecting. Again, a lot more red, a lot more sell-offs there. What I mean is big trading ranges closing near the bottom. Look at these red candles. Most of them are closing near the bottom and making lower lows, lower highs. So right now we're in this demand zone just above 96. Use caution. You got the swing low here, yellow horizontal line. If it breaks below that and closes below that, potential next target is down here. That's a trade idea. Got it. You can use the faster time frames. Say that again. If it breaks below this swing low and closes below that, you can look for a target down there. Intraday. Yep, last week again was a short trading week because Friday the markets was closed. So we had Sunday night impulse move up. Since Sunday night, last Sunday night, we had a sell-off, lower lows down here, consolidation of this big red candle during primary trading hours. Yep, so holding up above that 96. So that's a potential trade idea too. If it trades below the 96 and closes below the 96, look to trade short, bearish. And then if you're wrong, you get out, if it takes out your high. Potential first target down here, Okay, let's go to look to the next. We'll look at the bonds. There we go. Again, start off on the weekly, then go down to the daily, intraday. I'm still bearish the bonds because I don't think the interest rate's going to go much lower, but at some point in time, they're going to go higher. So if interest rates go higher, yields go higher, treasuries go lower. And this is the 30-year US bond treasury. So again, bearish. We're in a consolidation range above that 160. Red horizontal line has been a supplier as sellers. So we take out this 160 and close below it. Look to trade short. Then have your stop at that high. First potential target is right down here at swing low. Yeah, this is a swing low too, but I'm considering this more, well, this demand zone potential target on the downside. Takes that out, might even go down all the way down here, this swing low. Let's look at the daily. Yep, daily, again, holding up in this demand zone buyers. It'd be nice if it goes up here on weakness, and then another opportunity to trade bearish and running down there. But again, it might just not even go all the way up there. It just may break down here. This 160, key level. Intraday on a 4-hour. Yep, as well, very bearish. But it's in the demand zone where buyers are. So maybe we'll have that retracement, another opportunity. Look, if it goes up to the 160 and closes above it, then watch it run up to the next level. But I'm not buying it on the long side. I'll just keep looking for opportunities straight short, bearish. Let's go look at the equity indexes, the S&P 500. On the weekly, yeah, we didn't take out the high yet. There's the high, swing high, all-time high. We did reject this demand zone. Buyers not closing below it, but we had made a higher high and also low that. So huge engulfing candle of that prior candle. So yeah, before the end of the year, we may have higher highs. Bullish bias into the holidays. Expect that swing high to be taken out before the end of this year. On the daily, look at that. I made a Fibonacci. So the current trend is up. But if we happen to have a retracement without taking out that high, I have the 0.382 and the 0.618 labeled, even the 50% potential retracement levels. But again, I am looking for opportunities to reload to the upside. So let's see what happens on setups. Intraday on the 4-hour, I'm using the S&P 500 futures. See that, the /ES versus the cash index I showed you on the daily and weekly, SPX. What's the difference? What's the difference? If you don't know, ask me below. The last 4-hour candle, bearish pin bar, top of a trend. Okay, 47.25, it rejected, closing below. So maybe we'll have a rejection. I mean, a retracement. Good. I'm looking to reload on the bullish setups. Yep. So if it closes below that 4,700, maybe we'll go down lower to that 46.75, but we have a midpoint too. So intraday, yeah, I'll trade either direction. But for my swing trades, I'm looking on the bullish side. So again, these are potential target points if you take them short. Let's go on to the next financial instrument. Commodities. We'll look at crude oil. Oof. A lot of people complain about the price of oil. What are you complaining about? Could be worse. Actually, they've gone down recently. Yeah, they've gone down. Not my story, just price action showing you. We're looking at crude oil futures on the weekly chart. They've gone down a lot since November. Now I'm bullish again. Well, I've been bullish. So green candle, look what happened. Higher high, we made a low, huge tail, closed above this consolidation area. So potential target 75, close at 73, 76. So day trading, swing trading, yep. These are potential targets on the upside. Now let's look at the daily. Bullish pin bar, fake out, broke below that consolidation during the week and reversed again, still targeting 75. So if you're already in the positions, you can just keep moving up your stop. That target 75, and we break above that, watch for that move up to the 78 and 80 level. Intraday on the 4-hour, we broke above that demand zone. Very nice. Sorry, we broke above that supply zone, that red area supply zone. Yep. So we had a consolidation here around the 73 level and broke above it in strength. Very nice. So I'm bullish. Let's go look at the next commodity. Metals. Metals being first one, gold. On the weekly chart, interesting, you made an inside candle. We can take out the high. Yep, still an acceleration here. And bullish. So midpoint right there, gray horizontal line I labeled midpoint of that huge weekly candle. Break above that, close above that. Watch then to run up to 1850 and then up to that swing high yellow horizontal line. So potential trade ideas. If you want to use a faster time frame below the weekly, yep. So we can see the setup here on the weekly, but you can look for the triggers on the faster time frame. So let's look at the daily. There we go, daily. Past few days, made a demand zone of buyers there. Nice impulse move up there. Engulfing candle, almost a seller shut off. You could call it a seller shut off, or shut off those two candles. That's good. That's good. So defending 1800. Watch it take out that swing high, takes out that swing high. Again, we're looking for it to run up to that midpoint. Plenty of opportunities to trade here. If you want to day trade it or swing trade it, I would say swing trade it using GLD with bull put spreads down here. Look for the ones that expire 7, 14 days, 10 days. And look at the intraday 4 hour. Again, bullish pin bar right here. Rejecting that 1800. So now this is a demand zone of buyers. I'm looking at target up there. Let's go on to the next financial instrument, which is so popular as a bearish. Cryptocurrency, Bitcoin. Yeah, Bitcoin, just like crude oil. That was the high earlier, and look at the trend down. So crude oil, I mean Bitcoin, but again, it had a trend similar to crude oil. Yep. Cryptocurrencies are bearish. So Bitcoin, in this consolidation phase, we did close above that 50,000. It's been a while since we've been there. So potential retracements to the upside. I already have my Fib levels. So let's see what happens here. But again, concern, it might be just a retracement looking to roll over to get even lower. Use caution. And the daily, huge consolidation. Several, almost several weeks here. Huge consolidation coming into that potential supply zone of sellers again. This was bullish. See these two candles like tweezer bottoms, inside candle. What do you expect to it? What happened? We broke out to the upside. That was your entry. Took out along there. And if you're in now long, if you're still in long, I recommend you having your stop below the low right here. Then riding into the upside to keep moving your stop up as it keeps making new candles with the trend up. And the 4 hour. Yep, look at that. Friday, huge move up right there. That 4 hour candle broke above and closed above the 50,000. Next candle took out the 5100, but rejected closing above it. So we have a current bullish here on the faster time frames. Now we needed to look at what I consider to a little deeper on the currencies. We did look at the US dollar. I wanted to look inside the US dollar since the three biggest currencies. We'll look first at the euro. They, like I told you, the US dollar on that weekly time frame was looking kind of weak there, more likely weak. So let's look at the euro. Again, the euro makes up the largest percentage of the US dollars. In consolidation, and look on the weekly, made an inside candle indecision. So we break above that and close above that on the weekly. I would use that as a trigger to buy. Let's look at the daily. Yeah, see this blue trend line? Higher highs, higher lows. The momentum's working its way to the upside. It's in this red area, which is a supplier, as sellers. So one must be patient if it closes above that. And intraday, the 4 hour. Yep. See that supplier is sellers. So not surprised it's rejecting that. Let's go on to the next. The second largest currency in the US dollar is the euro. The yen. I apologize. The yen. Again, yen is a safe haven currency. US dollar, Japanese yen, Swiss franc are the safe haven currencies. So when there's fear, people usually gravitate to one or more of those currencies. When people are really happy, they're selling dollars. When they're fair, they're buying dollars. Got it? Understand that. Most people are not interpreting it that way. But again, when you're happy, you're selling dollars and spending that to buy something else. First, when you're scared, you want to be in a safe currency. You ask a lot of people, how many people have currencies, no currencies? Well, I'll put a fact here. Most of the U.S. currencies that are printed are abroad. Yeah, we have more currencies, digital currencies on your savings account, checking account, what do you want to say? But the majority of currency that's printed now is in other nations, being held by individuals or banks or nations. It's not going away anytime soon. Yep, Japanese yen, it's in consolidation here. It's doing retracement down, and we're going to watch if it takes out the swing low or that swing high. Those are important key levels. If it takes out that swing high there, that's going to make the US dollar even weaker. First, if it takes out the swing low, well, that's going in favor to the US dollar. So those are key levels to watch right there on the yen to help determine a safe where big money's moving. On the daily, we're already trending down. And look at that, just slightly closed in or out above that midpoint there on the daily. So if we have a next candle close below that, bearish, you can use that as a trigger. It's considered trading short down to that next price level, round number, as well as the swing low. And the Japanese yen on the 4-hour. Oof, look at that. Took that out. Let's zoom out a little bit more. Yep, there we go. That midpoint broke. That red candle closed below it. Look at that. Then we have a green candle. So potential could be a fake out, a retracement. Use caution there. And what's the third largest currency average in the US dollar? British pound. On the weekly, strongly bull. Yeah, huge candle. Broke above and closed above this consolidation. That's bullish. So I have a Fibonacci run there. And right now it's at that 0.382. We'll see what happens, because that next thing is watching it go to that 50% retracement key level. Again, this going up, making weaker US dollar. Let's look at the daily. Very clear. Look at that. All this consolidation here finally broke above it and closed above it. Looks like we're gunning to that 135, and that swing high is slightly up there. So if you're bullish, again, stay in it. I would have a stop underneath there. Look for that first potential target up there. And good money management. Don't marry your trade. Maybe you start scaling out of some of it, not necessarily adding to it. In the 4-hour. Yep, we're in a consolidation phase up here. Again, huge impulse move. Retracement, impulse move. Nice. Okay, so the US futures open shortly. I can start seeing what happens, and then tomorrow we'll see what happens as well too, because more traders are at their table.